Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. Prices during late April and May pushed up through some pretty significant congestion dating from September 2012, between 5.13 and 3/4 to 5.19.5. However, prices ran into a roadblock at the March 23 high at 5.40 and 3/4 and dropped down off until 2 weeks ago, when we had at the time a small gap-filling recovery, this time halted by another roadblock, or should I say a couple of roadblocks. The first and possibly the most significant, or more significant, was the bright red neckline extension, currently at 5.26.5, of the April to August 2024 head and shoulders top, a neckline that throughout mid-late May to early June, the market tried to make into a base of action, and something we are very familiar, as you can see, with today's action, but from the top side this time. The second, and to a lesser degree, is the July 23 high at 5.26.5. Congestion I also pointed out 4 weeks ago, and one we are also familiar with today for a similar reason. Anyway, this week has been quite interesting, with two gapping moves higher, possibly now in search of a third, an exhaustion one above, but one that may not necessarily be there, or be so. Prices have pushed high and so far halted yesterday at part of the newly drawn pattern on my daily chart. The dark blue middle tine overhead, currently at 5.34 even, or dropping down to the bright red neckline again and July 23 high. I suspect this newly drawn dark blue bullish shift pitch hawk may become a significant part of this commodity's future, so watch and see. Now, this leaves me with two final points to discuss, the same ones I spoke about last week, but which are still relevant. The first is the rising green short medium moving average, currently at 5.22 and 3/4, just below the market, along possibly with congestion from September 2012, between 5.13 and 3/4 and 5.19.5. I said 2 weeks ago how I was somewhat dubious about this congestion, and I still am. And though we have seen the market rise, I'm still dubious, especially about the green short medium moving average. The second and final point is something I warned about last week and the week before. We have a monthly key reversal down for June, with all the implications that may have. And what is more, this monthly key reversal down has been repeated in most of the other oilseeds and veg oils, so please pay special attention to it. I added that I thought this might decide whether the mid to late June action is either a halfway hesitation for possible move lower or a small double bottom. Well, it was there, and the market decided that it was a small bottom pattern, a small double bottom pattern, Adam and Eve type. The primary target X at 5.38 even, just under June's high, and a secondary high to reach target X1 up at 5.43 even, over the 2026 high, and one not seen since January 2025. I think this secondary target might be a stretch too far, and even the primary target is asking a lot, needing to push up over the dark blue middle tine. However, this is just now, but by the end of July, the dark blue middle tine will be above target X, which makes it for a more interesting market then. Winnipeg Canola. Just one pattern still shows the overall way forward. The longer term pattern I spoke about 19 weeks ago when I said, and I quote, I have also drawn in the meantime a March to December 2025 bullish Andrews pitchfork. End of quote. This pitchfork, now highlighted in bright pink on my daily chart, has so far not had any tines, even now, not had any tines tested bar the lower tine right back at the start of it. And that held up pretty well back then. Despite this, I still think this pattern is very important for now and in the future, so please, just keep it in mind and keep a watch on it. We are today in between the bright pink middle tine above, currently at 841.10, and the bright pink lower tine below, currently at 706.80. This has also left us with two shorter term patterns. First is a small lopsided mid-May to mid-June head and shoulders pattern with a dark blue neckline, currently at 775.80, which also forms part of a head of a more larger, more complex mid-April to late June head and shoulders pattern with a bright red neckline below, currently at 725.70. The smaller head and shoulders top saw a break below the neckline 2 weeks ago, giving us a primary target in the 733.20 zone, a target the market reached, and a secondary harder to reach target X2 down in the 707 zone, which in the face of it looked like a target it might have reached. However, as I said last week, and I quote, "But given the way the market reacted back in mid-April when we last saw a drop lower to these sort of levels, one that may have its own challenges," end of quote. And this has proved to be the case, enough that I have given myself notice of retiring it, this secondary target. The second larger head and shoulders pattern has still not fully formed as a head and shoulders and will not fully form as a head and shoulders. But instead, we must now consider it as a rarer part of a head and shoulders continuation pattern, if inverted somewhat, for all the implications this has, especially that what may look like a head and shoulders top is part of a bigger pattern. One not very evident to me, at least, just yet. There's another factor to consider here, and also a new pattern here to throw into the mix. The factor is common with other oilseeds and veg oils, and one I warned about 2 weeks ago. You see, June made a monthly key reversal down here, with all the implications that may have. And what is more, as I said last week, and I quote, this monthly key reversal down could decide whether the mid to late June action is either a halfway hesitation, for possibly lower prices, or a small basing action, possibly even a small double bottom. We will, as in the other markets, soon know, I suspect. End of quote. Now, whilst we have formed this monthly key reversal down, we have had a reactionary move up this week. Now, I will discuss this shortly, but I wanted to highlight the pattern this reactionary move up created. It was a small double bottom, Adam and Adam type, has reached its primary and secondary targets topside. This leads me to the new pattern, which has so far developed, though it is still early on, and I'm honestly not too sure about it just yet. It's a bright green mid-April to mid-June bullish shift pitchfork. The market at the bright green middle time, currently at 733.30, close to the dark blue small head and shoulders neckline. I'm not too sure on this pattern, but I'd watch it carefully as it might show what is inferring with the monthly key reversal down for June, and thus show what could be a bigger pattern overall. Versa Malaysia crude palm oil. To start with, please take no special significance from the color of my notations on this daily chart. My charting system sometimes goes rogue and decides it wishes to use other colors, in this case bright red for all my notes, but does not signify anything special. Okay, so as I've done here for most of last year and now into 2026, I'd recognize the wide congestion area that was overhead, but which became support, then a big congestion, and now edging into becoming a support once more between 44.08 to 45.59. Prices which had since late March been up over it, bar one failed attempt lower, mid-April, finally punched their way down through it 8 weeks ago, but could not sustain the move lower from the original gapping action higher, changeover or otherwise, which topped out for a second time 7 weeks ago, dropped down, and 6 weeks ago gapped higher once again, only to top out once more, in the process filling in some gaps. However, the market was not yet done with these heartbeat moments, as early 3 weeks ago prices bounced up from the medium moving average, currently at 44.70, pushing higher 2 weeks ago, up through the bright green bear channel line, currently at 46.27, with the bright green April to date shallow bear channel, currently 42.91 to 46.27. However, even this piercing higher could not be sustained, with no closes over the bright green upper bear channel line. Though I have to say, since mid-May we have seen rising lows, a sign of a bullish incentive, even if the top side has been limited, and I'll cover that shortly. This all came down to the same question here I've been asking here for the past 8 weeks, and I quote, question here is the same as elsewhere in the veg oils and oilseeds. The cap higher and significant supports below, is this market forming a topping action, or is it some form of bullish halfway hesitation? End of quote. I continued, and I quote, here it is not so obvious, and indeed it's not obvious if we are forming either a topping action or a bullish halfway hesitation, end of quote. All this has left us with the 4408 to 4559 congestion, as well as the pattern I drew 6 weeks ago of a mid-April 26 to date very shallow bright green bear channel. Right now we're towards the top end of this bright green shallow bear channel. I would only add something I spoke about 4 weeks ago when I said, and I quote, "So the current pattern here is driving this market, and I would watch this one very carefully for the next direction. I would just be aware of the possibility of false breaks given what we have created could be quite high," end of quote. That's been my view here for these many weeks. False breaks are a possibility, but I have also, as I've mentioned earlier, noted the rising lows and fairly static highs of a bullish incentive and a new pattern, an early May to date ascending triangle pattern, highlighted in dark blue on my daily chart, currently 44.59 to 46.72. There are no targets for this pattern as yet, but I can lay out some potentials for either a move higher or lower from a breakout of this ascending triangle. Thus, a primary potential on the top side would be plus 241 ringgits from a confirmed breakout from the ascending triangle pattern, with a secondary harder to reach potential of plus 344 ringgits from a confirmed breakout from the ascending triangle pattern. Please note we have the strong possibility of false breaks, so please pay attention to this. Meanwhile, a primary potential on the downside will be minus 151 ringgits from a confirmed breakout from the ascending triangle pattern, a secondary harder to reach potential of minus 344 ringgits from a confirmed breakout of the ascending triangle pattern. Please note, as I said earlier, we have the strong possibility of false breaks, so please pay attention to this in either direction. I'll be interested to see how this all now develops. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.